Welcome to Keep Going, a podcast about failure and success, hosted by John Biggs. Every week, we talk to an amazing person about a time they failed and what they learned. And remember, when you're going through hell, keep going.
Welcome back to Keep Going, a podcast about success and failure. I'm John Biggs. Today the show with Mark Horoszowski. He's with Moving Worlds, which you just explained to me, Mark. Welcome.
Yeah, thanks so much for having me, John. Excited to be here.
Yeah, so I want you to explain it like I'm five. From what I gathered, you're basically helping corporate customers be better people, which sounds antithetical to capitalism. So what do you guys do?
Oh, what do we do? So we work with companies like EY, Microsoft, SAP, and others who are saying, in order for us to succeed in the future, irregardless of the political landscape of today, companies need to do more good, like serve humanity better, and do less bad, degrade the environment worse. And the employees in those companies need to develop the skills, the insights, the ideas, the connections in order to do that effectively in the future. So we get to partner with these companies. They sponsor their employees on our platform. Those employees learn about social innovation, environmental sustainability, and more, and then actually apply those skills and their day job skills to volunteer with social innovators around the world. And what's really unique about these social innovators is they're not your traditional nonprofits. They are for-profit organizations that have been created to solve the problems of our time, like getting plastics out of oceans or delivering clean water to people that don't live on clean water grids. And so these employees are volunteering with these organizations, helping them grow, helping them improve, and then actually finding opportunities that these innovators can even help these companies solve some of their own negative externalities.
So this sounds super noble, but it also sounds like it's fairly difficult to do. So what have been some challenges here?
Yeah. Well, I'd say the first one is just explaining what we do, right? We're kind of working with a different type of entrepreneur that we call a social entrepreneur, right? So these are entrepreneurs that are using the power of business to create change, but they're also managing their negative externalities, like their carbon footprints or their pay gaps on their team, right? So that they can look at all aspects of their business and say, not only is our product world positive, but the way we operate as an organization is world positive. So even I think just popularizing that concept is hard because that's not kind of in the normal zeitgeist. So I think just building public perception around the importance of this work. And the second one is we're going to companies and saying, hey, your most valuable asset, can you redirect them away from short-term profit motives to give them the opportunity to get beyond their normal day job, to stretch into a new experience and to grow. And they will grow. Our data is very compelling that people will consistently say that experiences with us rival the best leadership development experience they've ever had. But it's a long-term investment in employees. And so convincing companies that this is a valuable use of their employees' time is no easy effort. So long sales cycles, complicated approval pathways.
Why did you decide to do this then?
Yeah. Great question. So, dating myself here. Coming out of the Great Recession, I was working in corporate America, and coming out of the Great Recession, I was also volunteering very extensively for health groups and community groups. And I just saw this widening inequality. There was widening environmental degradation, right? We rolled back all of these environmental regulations in order to speed up the economy, not too different than right now, and widening wealth inequality, right? Again, rolling back taxes, rolling back regulations, again, in order to speed up the economy and create jobs. But we saw these widening gaps. And I was just looking at the future and saying, these things are only going to get worse, and felt like the company that I was at, that pre-recession, I felt very aligned with from a purpose perspective. But post-recession was chasing profits at all costs. And I felt like that for me was not the contract I had. Like a lot of companies like to talk about it. Yeah, find your purpose at work. Like, do good here, change the world and make us profits. And certainly I understand the profit motive, but for me, that wasn't a driver. So I took a pretty extreme step. I hired my replacement and I traveled around the world and volunteered with these social innovators. And along the way, met my co-founder, who was an impact investor, meaning an investor in startups, but specifically with these types of startups that I mentioned that were really working at world positive solutions while also managing their negative externalities. And we just kind of raised that question of like, we actually think humans are less risk averse than financial capital. Like humans will go work on problems that money won't. Can we mobilize more people to do this? And that was the idea just over a decade ago, and really led to what Moving Worlds is today.
Yeah, that's interesting. So building this out, what does it take to get a startup or a social startup to start working with like an Ernst & Young, right? So that seems like it might be fairly difficult to get them to first off work with you, because that's anathema to their mission. It seems like working with somebody who's like, I don't know, flying people around the world constantly to turn them into accountants or whatever.
Yeah. Well, I think companies are seeing a few main shifts, right? So one is they are seeing employees that really want to make sure, at least their highest performing employees, that their efforts align with the company purpose and values. So let's take EY as an example. They've set out with the 2030 mission of positively impacting the lives of 1 billion people, right? They believe that doing so creates goodwill with governments, creates goodwill with some of their corporate partners. And it's a draw, right? If you are a smart, driven employee, you probably care about your family, your community, the environment, one of these things. And you want to work at a company that cares too. And the data is pretty compelling here. Companies that invest in social impact and in communities have more loyal and higher performing employees. And so one is just from a talent perspective, right? The other one is from a business partnership perspective. So increasingly, governments and businesses, even in today's political, what I will call headwinds into our sector, businesses are still in greater number than last year, despite political headwinds, measuring things like pay gaps, like carbon footprints. Investors care about these because in the future, these have risks for a business's bottom line. And so the businesses that know how to lead effectively in a future economy that does embed sustainability and social equity into the core business models, even if they don't talk about it, is a business that is more likely to succeed. And there's actually some like ETF like funds that have been created that just show, okay, for companies that prioritize these things, do they outperform the market, and they meet or outperform the market? So one is just from a business innovation perspective. And then the third one is from a partnership perspective. Businesses are take an EY, right? They're oftentimes implementers for a Microsoft or for an SAP or for some of these other big enterprise technology companies, right? Or they're doing massive work with a Unilever, right? And so when these companies are also doing business with other large corporations, they look for ways to deepen their relationships and conversations and PR opportunities. And that benefits all parties. And so again, having these kind of shared missions and shared workflows that benefit more than just the bottom line are beneficial to these organizations.
Now, is all of this working?
Yeah, great question. So as I mentioned, there's some data that shows that, as an example, one of them, and of course I'm blanking on the name as we go into the podcast, but I can share it afterwards, where the companies that have the happiest employees, so the most purpose-driven, the most loyal employees, outperform the market, right? So investments in people beyond skill development, beyond career development, we're talking about the intangibles, right? The happiness, the connections to purpose, perform or outperform the market, right? So I'd say on that first pillar, absolutely. I think secondly, from business innovation, are we preparing people to lead into the future of business? Well, we don't really know what the future of business is, especially with AI. But historically, what I can tell you is some of our customers, including one of our large tech customers, by virtue of their employees seeing their earliest AI models being deployed in other contexts where the population was not all white males, they saw embedded racism in their technology. And they were able to fix some of that. And in so doing, were able to appeal to a much larger, in fact, a majority of the world's population. Right. So I think it creates insights for people that leads to business innovation. And we know that those have led to sales over time. So now what does that look like 10 years from now, 5 years from now? There's a lot of questions, Mark, but what we do see is that a lot of the leaders that we work with are believing in that. And then I think on the third pillar of like the business partnerships and the government partnerships, even in a time of government, like massive government cutbacks, they're still building partnerships with the corporate sector. They're still looking for alignment, and they know that those have political risks. So doing that alongside organizations that speak a goodwill to the employee base, especially in democratic-leaning countries, builds positive goodwill, positive decisions, positive re-elections.
What's some of the best practices for folks who do want to try to do a social startup, be a social entrepreneur?
Yeah. So I think the biggest nuance starts actually with incorporation, right? So I think we are majority population, right? Says like you incorporate as a business or you incorporate as a nonprofit. And in growing numbers, and I'm speaking to a US audience here, Different states have what they call either public benefit corporations or social purpose corporations, at least where I am in the state of Washington, or benefit corporations, as an example, in Delaware. So you're actually seeing different legal designations being created. Patagonia is going to be like the most popular example of this, right? They were incorporated that way, and then they actually like reincorporated in Yvonne's transition out to create an employee-owned trust. So there's even more complicated models, but the first step is incorporation. And the reason why that's so important, and we can learn from failure here, take a Ben & Jerry's. When Ben & Jerry's first started, they were a very mission-driven organization. Very, very like, they advocated, they tried to source the highest quality products, and they had a huge loyal customer base. And as soon as they got acquired by Unilever, all of that went out the window, right? All those things got pulled back, customers got pissed, sales dipped, business was in jeopardy. They reinstituted those things, and they've eventually righted their course, at least until Unilever divested the unit. What we saw in that transition of purchase is the mission went wayside, and we only cared about profits. So that's why you see that incorporation really matter. And if you're already incorporated as an organization, you can reincorporate, you can update your articles of incorporation. There's other ways to do it. So that's step one. The second step is who are your stakeholders and influencers? So oftentimes, see this all the time, entrepreneurs rush out to go raise money. They meet with investors. Investors aren't as fluent in the space, and they say, hey, raise on a convertible note, raise on a safe, maybe raise on a round. And while those instruments don't necessitate that you only can then grow through accelerator and then venture seed funding and then venture capital funding, they really kind of force entrepreneurs there, because the only way that early round entrepreneurs or investors are going to get their money out in the short term is via some type of next round at a higher valuation. But there are other ways to raise money. If you're registered this way, you can also receive philanthropic capital, which is a great way to grow. But there's also other instruments like revenue-based loans or revenue-based equity buyback agreements, which is something that essentially what Moving Worlds was raised on, where every year we partition a percentage of our revenues that goes back to our seed investors. So we're able to actually start buying back our equity from our investors and redistributing that to our employees. So how you incorporate, how you capitalize, and then the third is how you manage. Right. So I know when I report to my board, I'm reporting around employee health and mission before I'm reporting about our profit margin.
Interesting.
And so how we set up our governance is a very important way and signal to how we're operating our organization. And that means everybody within our organization as well is optimizing not only for the growth of our organization, but also managing our negative externalities and, of course, managing towards our impact.
Can a regular startup, somebody who's making, I don't know, a SaaS for marketing, can they use this same model to, I don't know, focus on the good stuff versus shareholder value, or is it too specific?
Yeah. My personal belief is absolutely right. If a clothing manufacturer, i.e. Patagonia, can do that, right? I think SaaS companies can as well. Now, if they've raised a bunch of venture capital money already, that's a harder shift, right? You're going to figure out how to return that capital to investors. So it's not a easy change if you're on that. But what I would direct there is focus on market opportunity. So as an example, there's a tech solution within the realm of Moving Worlds. So one thing I didn't mention earlier is, yes, we engage these corporations to volunteer their skills with social innovators around the world. The other half of our organization is providing on-demand acceleration support to social innovators in over 110 different countries. So one of the entrepreneurs that we're supporting via that acceleration network is using technology in order to help make technology more accessible. Actually, we have a few of these innovators, and they're really cool to see. So what they've done and what they've figured out is there's actually a very, very big business model in helping web applications be more accessible to people with non-standard speech, non-standard sight, non-standard hearing, and others, right? So by cracking the nut on that, they've actually created a really healthy business model. So to your SaaS marketing solution, right, what's important is that there's a mission alignment, right? Are you existing to do something more than just sell ads, right? Can you find ways where there's a customer base that actually needs information that will help them change behavior and live more healthier, fulfilling lives? If that's what you're really good at doing, you can turn that into a positive mission, and you can align your resources accordingly.
Interesting. Where can people find out more about what you're working on?
So you can connect with me directly at any time. My email is mark@movingworlds.org. Of course, you can check out our website at movingworlds.org. And from there, you can connect into our LinkedIn channel or even just directly with our team. All
right. I should start a board, and then I'll just report to the board like how healthy I am and how happy I am. I think that sounds like a lot more pleasant than trying to like manage somebody's $10,000 investment.
Yeah, that's right. Yeah.
In the traditional way. Interesting. Well, thank you, Mark. This has been really enlightening.
Yeah, happy to share. Thanks so much for having me and giving me a chance to share our story.
This has been Keep Going. I'm John Biggs. We'll see you next week.
Thank you for listening to Keep Going, a podcast about success and failure. Remember, Keep Going is entirely listener supported. If you're listening to this, please head over to keepgoingpod.com, where you can subscribe to the podcast for as little as $5 a month. This is a labor of love, and every little bit helps. Thanks for listening.